Hi, I'm BrettSwarts, founder of Capital Gains Tax Solutions, where we help you create and preserve my wealth by deferring your capital gains tax and giving you an alternative to a 1031 exchange. So in this video, we're going to talk about the number 2 reason to consider the Deferred Sales Trust versus the 1031 exchange. Let's start with the 1031 exchange. When you're owning property and you're exchanging property, you're receiving the income off of the cash flow that's coming in from the property. Now, that might put you in a higher tax bracket, and it may not be the most advantageous for you right now, given your other current income streams. So the intent is to perhaps lower your tax bracket and or pay less in taxes on just your income taxes. And a way to do that is to allow the Deferred Sales Trust to compound the income that's coming in, and therefore you're not receiving it in a given year, and therefore you can lower your tax bracket. So what do I mean by all that? Well, let's walk through a scenario. Let's imagine you make $200,000 in your normal income for just wherever you're working your business, and another $100,000 with passive commercial real estate or investment real estate. Well, right now you're around a $300,000, or probably at least above the $250,000 after you've taken some depreciation from the rental income. But you're probably at least $250,000 or above, which puts you in probably a higher tax bracket, depending on your current situation, if you're married or single. Now, with a Deferred Sales Trust, you can decide to sell that same $100,000 piece of real estate that's producing $100,000 in income, and move it to the trust and allow the trust to have the income compound on top of itself, therefore lowering your overall tax bracket. So next taxable income would be $200,000. The other $100,000 would be just building on the Deferred Sales Trust. And then fast forward a number of years, when you retire or you stop working at the $200,000 income, you can start pulling from the other one. So it's kind of like a 401k in that sense, or kind of like an IRA. And the key is just to help you create and preserve more wealth versus having to take the income on a 1031 exchange by using the Deferred Sales Trust. So that's the number 2 reason to consider the Deferred Sales Trust over a 1031 exchange, is what is your net taxable income? How can you most take advantage of the laws that are out there using the Deferred Sales Trust to lower it? So we look forward to connecting with you in the next video. Thanks so much.